Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today on the show we have Alasdair Macleod and also Uli Kortsch. Alasdair is head of research for Gold Money and an Austrian economist. He has a background as a stockbroker, banker, and fund manager. Uli is the founder of both the Monetary Trust Initiative and Global Partners Investments. Uli has worked in over 50 countries, written a bill for Congress, and conferred with approximately 15 national presidents, ministers of finance, and ministers of commerce. Welcome, gentlemen.
It's nice.
Thank you.
So what we have is a situation of extreme, massive global debt internationally. What we have done actually is done a calculation that indicates a certain level of money printing, the interest rates that would be necessary to rise for governments to consume all of their revenue. If you look at the Federal Reserve and the U.S. government as an example, we have done a calculation that if U.S. interest rates were to rise 5.3% in a long-term sustainable way, that would actually result in the entire U.S. federal government budget, except for interest on the national debt and losses on the Federal Reserve balance sheet, would need to be paid by money printing. So it would consume the entire federal budget. So it's quite a challenge, and governments have been attempting to address that by financial repression, repressing interest rates, keeping them as low as possible, lowering that to help the servicing of that debt, as well as other measures such as quantitative easing. Gentlemen, just wondering your thoughts about that?
This is Uli. I'd like to extend the talk actually just a little bit, or the context, because I don't think it's just government debt, because there's a flow back and forth between corporate and private debt, like individual and corporate debt, and government debt, as we saw during the 2007-2008 crisis. When there's a deleveraging in the private sector, there's a massive pickup on the governmental side, and vice versa. And I think I realize that we tend to talk more about government debt, but global debt today is at about 110% of global GDP, something like that. And I think the issue is to combine those two, and I can go into detail theoretically as to why. But anyway, that's my suggestion.
Mm-hmm. And Alasdair?
You're absolutely right. I mean, I actually put the total amount of global debt higher than you indicated, Uli. I think it was Pete Marwick. It was one of those big firms, the big accounting firms on their consulting side, did an analysis of the level of outstanding debt at the end of 2015. And they came up with a figure of, I think, if I remember correctly, 200 trillion. Now, I think that global GDP, people say it's around about 75 trillion. So it indicates actually that it's a bit worse than you suggest. Now, this year, since the beginning of 2015, obviously the debt has increased quite substantially. And of course, we're not also taking into account the shadow banking system, which can't really be quantified, but the Bank of International Settlements occasionally do an exercise in trying to quantify it. And I think we're looking like adding a figure like another 75 trillion on top of that. We are talking such enormous numbers. Basically, the whole system is in a debt crisis. And if I can go back to something that you said, Richard, that you calculated that if interest rates in America rose by 5.3%, then the entire budget would have to be covered by money printing. Okay, that may or may not be right. I mean, the problem is that we don't even get there for the very simple reason that, by my calculations, if the Fed funds rate rises to around about 2 to 2.5%, possibly slightly more, then that will trigger a complete collapse in the economy, rather like the Volcker thing. I mean, Volcker in 1981 had to jack it up to, I think it was 21%. And ever since then, you've had a declining series of peaks to kill the inflation meme, if you like. This time round, I reckon that the rate which actually would kill inflation and kill demand and kill the economy is no more than 2.5% to 3% on the Fed funds rate. Now, that is a horrifying thought. What that tells us is that it is virtually impossible for the Fed. We've known it's almost impossible, but the Fed doesn't know it's impossible. It's almost impossible for the Fed to have any control over outcomes if the only room they have got is to raise interest rates by no more than 2 to 2.5%. And that, I think, is the real problem. So if we have inflation picking up next year, which, by the way, is already indicated through the producer prices index, what we are likely to have is a situation where you've got no economic growth, if I can go back to that horrid phrase, which I don't particularly like because growth is meaningless. But anyway, if we have no economic growth and we have inflation at the price level beginning to pick up, you can see that the Fed is faced with a dilemma. What do? Do they raise interest rates to the level at which it stops inflation, or price inflation, that is? The answer is they cannot actually do it. So I can see that there is a huge, great crisis ahead of us on the relationship between interest rates being managed by the Fed on the one hand and this mountain of debt and what it would take to topple it over on the other. So I think we are actually at an interesting point, but a very, very dangerous point. And looking into 2017, I must say I am not at all hopeful.
Yeah,
I sad to say I really agree. I come from the same school of thought. And therefore, I think the next, quote, recession isn't going to be a normal recession at all. I anticipate that the Great Recession of 2007, 2008 is going to be a minor recession in comparison to what I believe we're facing.
Well, this raises a very, very interesting question, Uli, because are we facing a situation where we have the beginnings of stagflation, if you like? I mean, I think stagflation has actually been with us because the inflation numbers are so suppressed. The idea that the CPI is a reflection of the general level of prices, I think, is completely erroneous. But anyway, putting that to one side, if we end up with a situation where we have official stagflation, then I think this is actually quite different from the 1970s, because in the 1970s, we didn't have all this debt overhanging global markets. We had some debt, but not to this extent. The result was that when Volcker raised interest rates to kill inflation, he could do it without collapsing the system. That option is no longer on the table. So we now have a situation where we've got to look beyond, if you like, this sort of idea that we can actually control inflation. In which case, we are moving into potentially a hyperinflationary situation if the general public begin to understand that the paper dollars that they hold, or the paper pounds, or the paper euros, or the paper yen, or whatever it is, actually only has value because they think it has value. And the moment they begin to understand that it's only their thought that gives this value, then the whole thing is actually in a very dangerous slope. And then the comparison is not so much with the 1970s, but what has happened in Zimbabwe, what happened in Germany between 1920 and 1923. So this actually, I think, does become a far more serious situation.
And to support that, recently Ray Dalio, hedge fund manager at Ray Dalio, warned that a 1% rise in yields would lead to trillions in losses. He quotes his quote, it would only take a 100 basis point rise in Treasury bond yields to trigger the worst price decline in bonds since the 1981 bond market crash. And since those interest rates are embedded in the pricing of all investment assets, that would send them all much lower. So,
Absolutely.
Yes,
Absolutely.
that's very true. Let me throw the curve in the other direction. I'm not convinced it's going to be inflationary. It could very well be deflationary. I'm not saying it will be. I'm saying I'm not sure which direction this is going to go in. Speaking as an American, a very confused German-Canadian American, every economic collapse that the U.S. has seen over more than 100 years has always been deflationary. And I keep on telling Americans that, and they kind of look at me and they go, "Yeah, that's." I said, "How come we're so desperately afraid of inflation?" I'm not saying we shouldn't be. Don't get me wrong. I'm just saying don't guarantee that's the direction it's going to go in, because if that were the case, then what you should do is load up on debt like crazy at zero interest rates today, and we're going to do fine once we have this massive inflation. I'm not convinced it's going to go in that direction. I think if I go back to the 1930s, the Great Depression, one of the reasons was Smoot-Hawley. The locking up of the borders of the United States from a trade perspective, and both candidates, one of whom I'm convinced have been voted in as president on the 9th, both are strongly anti-trade. We could have exactly or a very similar scenario happen as in the 30s here.
Mm-hmm.
That certainly, I mean, Smoot-Hawley, certainly, the ghost of those two gentlemen walks the international stage. Of that I have no doubt. But what I would take issue with is the idea that it's either deflation or inflation. If you look at any inflationary episode, basically inflation impoverishes the masses. And that, I think, is what we're going to see. So if what you're saying, Uli, is that you can see that there is going to be wealth destruction, then I agree with you entirely. If that is what you're calling deflation... Oh,
yeah. That's what I'm saying. Massive wealth destruction.
Yeah.
Yeah.
But it's, the wealth destruction comes through the collapse of the purchasing power of the currency. I mean, this was the lesson, certainly, of the massive inflation which destroyed the mark in 1923.
I think very, very much.
Yeah, but I think that was.
Yeah.
I think that was driven by external payments, the necessity of Versailles. We don't have anything like that today, so I'm not sure. Go ahead. I'm not sure it's applicable in this particular analysis.
Well, what I would say, what I would say is whether it is the French walking into the Ruhr to take over the engine of production in Germany and all the rest of it. No, the seeds of what happened actually were set in the First World War. The events that occurred along afterwards actually were not the cause of the collapse of the currency. I mean, the problem very often is that historical analysts will look at unrelated event. Well, I mean, none of these events are unrelated, but different events, and then tie them together. The fact of the matter is that by the end of the First World War, the only way in which Germany could actually, as a state, function was it needed to print money. That was the beginning of the problem. And it culminated in 1923 with the collapse of the currency. Nowadays, we've got a different set of circumstances. But equally, we have a burden which is at least as large and at least as painful as the French walking in and taking over the Ruhr. Reparations, however you like to define it. We have this thing called debt. And that is at least as onerous as anything the poor Germans faced when they lost World War I.
And if you do the math, it comes out to, for an inflation rate of 4% that is run for 10 years, if you run 4% inflation rate for 10 years, essentially the burden of the debt can be reduced by 1/2. And so that has been the preference, by governments and central banks historically on how to deal with the debt. Alan Greenspan recently mentioned that how helicopter money could lead to very high levels of inflation. And this is the fiscal stimulus that everybody is talking about implementing. The Canada yesterday just announced an infrastructure bank of $81 billion to promote infrastructure projects in Canada. So Alan Greenspan mentioned you can't just print money and buy the infrastructure, for example. Ultimately, inflation begins to take hold. The consumer price index came out in the last 2 months at an annual rate have been more than 3%. I think we're going to be watching the inflation issue coming. I don't deny that there is a strong deflationary process that's been going on very similar to what happened in Japan after their crisis, but that's going to pass. And the issue is how long can we maintain long-term interest rates by continuously pushing money into the system? I think there's a limit to that. That's what Alan mentioned.
Yeah, although I'm with you. I think there's agreement between the three of us. Pardon me. I'm having a terrible day with allergies today, so you'll have to pardon me occasionally. There's going to be a massive destruction of wealth. Absolutely. I think all three of us would agree with that. Let's talk about pushing money. Because of the QE programs never really did. There's no money printing. I know we keep on calling it that, but 100% of those funds ended up in the reserve accounts of banks. Banks do not lend reserves. That's why we've not seen any inflation. And so in actual fact, there hasn't been any money printing in the way we misuse. I mean, nobody prints anymore today. I mean, more than 98% of our money is electronic anyway, but we all keep on using that word. But those funds never ended up on the street. As a matter of fact, I would say not a dollar of that money ended up on the street. And I had a public argument with a member of the Federal Reserve at one point on a panel on this. And I said, this is huge. This is the largest factor for inequality in our country today because of the actions of the Federal Reserve Bank. Because the money did not end up on the street. The money only ended up, in reserve accounts, and massively increased the asset values of assets. And afterwards, it was only after the public event was over, the Fed guy came over and says, "You're absolutely right, you're 100% right." So I get frustrated when that kind of thing happens, But anyway, it's just a weird environment that we are in. But the biggest issue is debt. Man, do I agree with that?
Yeah. The only thing I would say is that the banks have been drawing down on their reserves over the last couple of years. And the reason for this is really quite simple. You've only got to look at the LIBOR rates, in other words, the wholesale money market rates for dollars, and compare that with what they get leaving it in reserves at the Fed, and you can see that there is a huge incentive to gradually move some of this money out, and that's actually been happening. And this has been very noticeable to me. Richard kindly mentioned my FMQ metric. Basically, this is fiat money quantity. And what I do with that is I include money which is produced but not in circulation, as well as money that is in circulation. So by definition, FMQ is comprised of the reserves held at the Fed plus the Austrian true money supply. I'm simplifying it a bit because it's a little more complex than that. And that has been increasing at an accelerating rate. And recently it has accelerated as well. And also if you take M2 and subtract M1 from it, there again we see that there's an acceleration above trend in that, and that's recent. So that sort of suggests that there is some sort of demand for money beginning to evolve somewhere outside the Fed and the US banking system. Now, the reason I put it that way is that I don't see an awful lot of evidence of this ending up in Main Street in America, though undoubtedly you've got student loans, you've got credit card debt, you've got auto loan debt and all this sort of stuff. I guess that the rest of the world is quite short of dollars because banks are not really all that keen and markets are not really all that keen to roll over debt. So I think dollar debt, international debt, is tending towards contraction, and that's creating a demand for dollars, which I think has also helped keep the currency up. But all in all, what we have, I think, is a situation where the debt is still, as you rightly say, Uli, the dominant factor. And it is so enormous, it is actually destabilizing, in my view.
And I'd like to point out also a recent example in Brazil. There was a target by central bank there to do a certain rate of inflation. But what has happened is it ultimately leads to a much higher rate of inflation than anticipated or targeted. So this is an important lesson to keep in mind, that it's very difficult to keep the inflation target at a certain level. As I mentioned, 4% for 10 years, reducing the burden of debt by half. But it may be difficult for central banks to keep it at 4% once the genie's out of the bag. And so that...
Yeah, a lot of that, I totally agree. Well, once it's out of, a lot of that has to do with expectations also, obviously. Once people expect it, boy, to stop that is just unbearably difficult.
Yeah.
That's right. It's the subjectivity of prices. Basically, the value that is put on the dollar, as in terms of its purchasing power, is not up to the Fed. It is up to the people, and that is the bit that is totally beyond the Fed's control. And this is the point that the monetary planners actually miss. They can never ever control the purchasing power of the currency.
Given that background, gentlemen, how do you see that playing into the U.S. presidential election? Do the candidates have a plan for addressing debt? Do you think they will have an influence on fiscal stimulus? How do you see that playing out, Uli?
It appears to me that neither of them could care less. Debt has not been on the discussion at all. There's a number of us that have tried to bring that to the level of reality, and that hasn't been the case. I don't know if you saw the. Do you remember Richard at Camp Kotok? There's a few media people there, and so a few of us were filmed. And there's a quote that I made that ended up going around the world because I kept getting responses from people, literally from Asia, from Europe, from all over the place. And the question was, what do you think is the largest issue that the new president will face? And I said, it's debt.
Yes.
And I said, because if we don't deal with it, it's going to bite us in the you-know-where. Well, that went viral.
Yes, exactly. Yeah. And Alasdair?
Well, Uli's absolutely right. Debt hasn't been mentioned at all, and I don't know whether that's a good thing or a bad thing because, I think if the presidential candidates had to air their true views on this thing in public, I think we would all get rather depressed by it. So in a sense, I suppose that, Hillary's problems and, the allegations that that Donald Trump is red in blood, as it were, when it comes to women, has been a bit of light relief. But it is a very, very
bad. It's so bad.
It is. It's a very, very serious issue. But I think what's interesting is not so much what the candidates say, because they say things to get votes. It's
right.
Right. What is said in a presidential or in our case a government election is actually bears very little relationship to practicality when you're faced with problems of office. But what I think is interesting as an outside observer is how the press has been totally on side with Hillary Clinton's attempt to become president. And they have I think, swallowed anything that has come out of the Hillary campaign, which is detrimental to Donald Trump. Now, Donald Trump, when he started off, I mean, it was interesting, but I happen to know someone who used to be his lawyer. And I asked him, what do you think of Donald Trump? And he said, well, do you know what? He was the most intelligent man I have ever worked with. Now, that set me back. I thought that was not the answer I was expecting at all. But this sets the mind, if you like, on a track of thinking. And I think, basically, if you analyze what Donald Trump has done, is he has worked out exactly what buttons to press to get people to vote for him. I mean, remember, nobody in nobody in the Republican establishment wanted this man there at all. But he got there. It's quite amazing what he actually achieved. And did he do it by taking the bank's money and, all that sort of bribery and corruption? I mean, I would call it bribery and corruption. It may be normal in America. So, but to us, it's bribery and corruption. He didn't go down that route at all. He did it more or less independently. I mean, this is a staggering result. Now, the way he achieved it was he obviously took, he must have got a bedside copy of Machiavelli's The Prince and worked out how to get people to support you into office. And I tell you what, if that's what he did, he's done it brilliantly. So now we have a situation where this guy who, perhaps 10 years ago never thought he would run for president and didn't mind what he said to radio host guys about, his attitude to women and all the rest of it, locker room chat, I mean, all that was sort of, before he actually sort of picked up Machiavelli's Prince and sort of read it and said, this makes sense. So, but Hillary's campaign has literally become, a sort of, if you like, a woman's lib thing. She's really pushing all the sort of the buttons about, I'm a woman, women run things, men are terrible and all the rest of it. I think actually that's not really working. So combination of what she's being accused of by the FBI and various others, and her sort of women's lib approach, I don't think is actually getting the votes that she really needs in order to succeed. Now, what is interesting is that the motivation for the FBI when it comes to reopening the case on emails, it seems to me that behind this can only happen if there has been a decision taken within the security services. So I'm talking about the FBI and the CIA, who I would regard as the deep state, as to who they actually want to support. And I think that they have come to the conclusion that Hillary is damaged goods. And they know, I mean, if they've got any sense, when I have to assume that, they know that Donald Trump is a bright boy. He's said what he needs to get the votes. And actually, what he has is a common interest with the deep state, is a desire to work, at the end of the day, with the establishment. So the establishment, I think, is swinging behind Donald Trump. Now, whether this is good enough on the day next week on the election, or whether it has to go through the Electoral College process, at this stage we don't know. I suspect that it's got to go through the electoral colleges. Now, if the establishment wants to support Donald Trump and ditch Hillary, then I have no doubt at all that the electoral college can be swung in Donald Trump's favor. So this, I find, is a fascinating thing which is evolving, and the effect on the markets is equally interesting because, we've got uncertainty in the markets, where the markets before were certain about, Hillary's going to win this, it's a no-brainer and all the rest of it. Suddenly there's a lot of risk being seen in this. I think the risk is being overemphasized, by the way. But markets are waking up to the fact that, life isn't just, the Yellen put and, we can continue to chuck money into bonds, equities, and don't worry, we sleep at night and all the rest of it. Suddenly they're beginning to think, hold on, there's a reality here. And it's rather like the sort of the Brexit situation, as it were. But the good news about it is that Donald Trump will be on side, if my analysis in this is right. And not only will he be on side, but the establishment will reinvent itself as far as the electorate is concerned, which is a very good thing.
Yes, I think that's what appears to be happening. It's very interesting how the establishment, the lobbyists supported and special interest groups supported politicians can quickly lose their support if they're not able to deliver the goods.
That's very true.
Yeah, and Charles Hugh Smith has just recently written about that, and he quotes, if there is any lesson to be learned from the ghosts of Watergate, it is that the big money support of a leader who has lost the ability to deliver the goods crumbles very quickly as the end game unfolds. The parallels between Hillary and Richard Nixon are not legal, they're political. Specifically, in even blunter terms, how can a crippled Politico deliver the goods to the special interests who bet their cash and political capital on the Politico's ability to deliver favors?
I would agree with that entirely, Uli. The only thing I would say is that this time round, it's not the big banks and all the rest of it who are going to be evaporating in terms of support. It's actually the establishment. This time, the establishment is going to control who actually ends up being president. And I think that is a very, very important insight, which, I mean, I've been looking at this all week and sort of trying to write an article around it and all the rest of it. So I have had a very keen interest in watching the developments. And that is the conclusion I have come to, that it is actually the establishment that is switching sides. And the fascinating thing is that the whole of the media has been in Hillary's pocket and they haven't caught up with it yet. They really don't see it.
I think that's very true. On the negative side, or whatever you want to call it, I think whoever's going to be the next president is going to be a one-term president, because I think there are no answers in our current economic system to deal with the accumulation of debt, etc., the overhang that we have. And so I wouldn't want to be the next president because they're going to be forced to deal with this, and I cannot believe that in 2020, that same person is going to get voted again.
Well, it depends. You see, let's go back to my idea that actually Donald Trump is not the fool that everybody thinks he is. I mean, what he does is he comes in, he replaces the old order. Things go wrong. He can blame things going wrong on the old order. It's the oldest trick in the book.
They always do. They always do. Yeah.
Exactly. If Hillary goes in, she can't blame anyone because she is the old order. So in a sense, I think actually that the Donald could actually work quite well. And I wouldn't be surprised if this is part of the thinking in the deep state. Because I mean, the deep state, from what I can see, my contacts and all the rest of it, tell me that the deep state is equally worried about the economic outlook as the three of us talking today are.
Yeah, certainly the military is. There's no doubt about it.
But recently, Trump has gone straight after the Federal Reserve, the central bank. I believe he's mentioned calling out the Federal Reserve Chair Janet Yellen, saying she should be ashamed of keeping interest rates low, accusing the Fed of creating a false economy, accusing the Fed of doing political things. All of those things are true. Yeah, and all of those strengthen his base, because that's his base. Yeah. Do you think anything would result? Would anything result from that in terms of changes at the Federal Reserve Central Bank in terms of policy or structure?
I think we're short a couple of governors right now. Instead of 7, I think we only have 5. And I can't remember what year Janet Yellen, when her term ends, and she's up for replacement. It's deliberately done between elections in order to minimize the political input. And I don't know what that year. I'd have to go online and see when that is. But there certainly is the possibility or for sure, the next president will put in several of the governors. For two reasons. Number one, I think there's two openings right now, and number two, they seem to exclusively pick academics, and in most universities, you're only allowed to leave for 2 years, and so therefore, after 14, 16, 18 months, whatever, they tend to resign, and so then the current president puts somebody new in. So the next president will definitely be able to stack the deck in the Fed. And also in the Supreme Court, obviously, although that's not so much an economic issue, although it is somewhat, but not nearly as much.
Would there be a significant political pressure applied by Trump if he were to get elected on the central bank in terms of setting policy, either influencing monetary policy or advocating Congress to do fiscal stimulus?
Let's just stay with the Fed just for a second. Certainly that has been. I mean, Nixon did that massively with what's the guy's name? Who was the chair of the Fed at that time, and who deliberately overheated the economy in order to get Nixon reelected. So that has happened. That will probably happen again. Does the Fed chair? I mean, the Fed isn't just the chair. It's the FOMC that ultimately makes the decisions. Although certainly under Greenspan, I mean, he ran the show. The FOMC was a one-man show. That was not the case under Bernanke, and I don't think that's the case under Janet Yellen. So there is a freedom, and we've got the dots that have come out every single time. I had lunch just very recently with one of the Fed presidents, and complained quite bitterly to him. So it wasn't, was a him, and about the communication that was coming out, and then the lack of action in light of that. Mm-hmm. And I was very strong in my criticism, probably a little bit too strong. But a paper came out shortly afterwards, shortly meaning 4 or 6 weeks later, basically agreeing with my point. And where this, one of the policies now is what they call forward guidance, where you deliberately try to use that in order to move the markets. And I was very much complaining about that.
Yeah, I agree with you on that, Uli, entirely. I think forward guidance is misused. I think forward guidance has a place if you actually understand economics, if you understand what is happening to money, and you understand that you need to retreat from money printing, from controlling everything. Then you can use forward guidance to tell the banking system, look, over the next 5 years, we are going to move back to freer markets, and these are going to be the steps, and this is going to be the schedule, because banks can then prepare for it, and then the transition becomes possible without, real dislocation. But to use forward guidance to pursue current policies, I think is turning out to be a horrendous mistake.
I'm with you, totally with you.
And your final thoughts, gentlemen?
I'm deeply concerned for the next 12 to 18 months. I'm deeply, deeply concerned. As a matter of fact, I just made a phone call to the CEO of a very major company in the United States, and just before this phone call. So we're talking, an hour ago, and said to him that be careful what you do as far as leverage, be careful what you do as far as valuation, from a stock perspective, et cetera, as to what's happening, because I think we're going to be hit with a 2x4 over the head here.
And Alasdair?
I think 2017, which I'm looking into now, the story is going to be stagflation. I think that escaping from that is not going to be as easy as it was. Not that it was easy. It's not going to be as easy as it was in the 1970s. I think that it's going to morph into something far worse on the inflationary front. I would not be surprised on a 2-3 year view to see the complete destruction of paper currencies. And I'm extremely happy that I'm working for Gold Money and in the center of just about the best hedge that you can possibly have against these events.
Great, thanks very much. Uli, how can our readers and listeners know more about your work?
You can go to my website, ulikortsch.com, so ULIKORTSCH, and so my video channel is there on YouTube, my various websites that I run, position papers on different things, Twitter account, it's all there. That's probably the quickest way of doing it.
And Alasdair, about your work?
I'm head of research for Gold Money, so goldmoney.com, and hit the button on wealth, and then you'll get another menu which will show you various research options. I also run my own site, which is financeandeconomics.org, O-R-G, which basically is, if you like, a reprint of what I do mostly for Gold Money.
Great. Thank you very much, gentlemen, and we'll stay tuned to see what happens on Tuesday. We'll talk again on Wednesday.
Thanks very much.
Thank you ever so much.
Take care. Bye-bye.
Bye-bye.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.